Hello and welcome everyone to the Week Ahead Commodity Report, where we of course will be reviewing the markets for the week ahead. So last week commodity prices surged after a key report showed the US economy added fewer jobs than forecast. This now diminishes the possibility that the Federal Reserve will taper stimulus anytime soon. With that, commodity prices advanced higher across the board. We saw everything from metals to energies to agriculture markets notching up explosive gains. This, of course, presented savvy traders with an incredible opportunity to generate huge profits fast. Last week, aluminium prices, they surged to 10-year high. Palladium prices soared 9%, posting their biggest one-day gain since May of 2020, whilst copper prices have now doubled from the lows seen 1 year ago. The bullish momentum also spilled over into other metals, with gold prices rallying to $1,830 per ounce. That was the highest close since mid-June, while silver prices, they jumped almost 5% to close the week trading near 4-week highs. Both metals have had incredible runs since the recent lows, silver prices climbing over $2.50 per ounce, gold surging more than $150 per ounce. Meanwhile, crude oil prices soared 11%. Oil prices are now up 265% from the same time a year ago. Elsewhere in the commodity markets, sugar prices, they hit a 4-year high. Coffee prices, they posted their biggest monthly gain since 2014, and soybean prices surpassed an all-time high. Commodities are once again starting to attract a lot of attention. This is on a scale not seen since the global financial crisis in 2008, amid signs that the global economic recovery is starting to stall as rising inflationary pressures and the spread of the Delta variant continues to drag on growth. The focus now turns to the economic data to be released ahead of the Fed's meeting later this month. Any further indications that the recovery is stalling, that may give the central bank cause to delay its tapering plans until the middle of next year. Elsewhere, as we go into next week, we have a public holiday in the USA on Monday for Labor Day, and we also have the European Central Bank announcement on Thursday next week. As you know, volatility creates opportunity. Banks, hedge funds, they are making multi-billions capitalizing on the week-to-week volatility, and it's not so different for the retail market. The majority of our clients at the Gold and Silver Club, utilizing our proprietary research-driven trading approach, have already made in excess of 6 and 7 figures so far this year, and we still have another 4 months left to go. So if you've been kicking yourself for missing out on some of the biggest trading events so far this year, you still have time to make 2021 your best year yet. So with that, let's move over to the charts and we'll talk you through exactly what we're looking at here as we head into a new week. First of all, moving over to gold. So from those of you that watched our report last week, gold asset of the day at the beginning of the week, this played out within the exact ranges that we anticipated with you. So we were expecting buyers to come in at 1800 and a range, taking the price up to the 1830 swing high over the course of this week. We were expecting 1800 to hold and 1830 to get tested. In fact, we had to be patient for that because we finally hit that level at the end of the week. You may recall what we suggested would happen next if we did break out to that level. So first off, we've taken the opportunity to bank another position here on strength on Friday after the non-farm payrolls data with gold. So we banked 900 points profit. So of course, for every 1 lot contract, that's $9,000. For every 10 lot contract, that's $90,000. Now the expectation here as we go into next week, we were already anticipating a breakout towards the swing highs. This is very clear from all of our analysis from the week ahead report and also our gold report last week. All of that has played out. So now that has played out, our expectation would be as we go into next week, certainly considering this is the highest close that we've had in over a month, is that we could breach above the recent highs here, and this will very likely trigger a lot of traders with their delayed confirmation to buy in quite late on the move. So we've been building into gold below $1,750 per ounce. This has enabled us massively to capitalize on the recent slingshot move higher here for gold. So now, as we go into next week, traders who've been waiting too long, sitting on the sidelines, will now start to get FOMO, the fear of missing out, as the price continues to go higher and they're not on board the trade. This is very likely where you'll start to see traders buying in too late, and then typically as you go into next week, especially where we have a Labor Day holiday in the USA on Monday, there's going to be thinner liquidity in the market, and it wouldn't be a big surprise to see a slight push higher here into the early part of next week, but then watch out for any selling pressure that we could get as we continue to run through Tuesday, Wednesday, and into the lead up of the European Central Bank announcement. So something along the lines of this, where you could get an initial breakout to the upside at the beginning of the week, but that gets faded with traders getting in too late into the move and then trapped at higher prices and essentially liquidated. If we don't see that pressure at the beginning of the week after the US public holiday for the Labor Day holidays in the USA, I would anticipate that we may see that pressure later on in the week after Thursday's European Central Bank announcement into Friday. So again, the expectation is that we could go a little bit higher here with gold at the beginning of next week. Just be mindful that there's going to be a lot of traders that get in too late in this move, and typically they're not rewarded for doing so. Now, moving over to silver, as we've talked you through so many times, there's been a lot of opportunities to buy into this market recently when it got under 23 US dollars per ounce. That's a zone that we've discussed with you on a number of occasions on Silver Asset of the Day, that would be a great area to look at buyers coming in and an opportunity to build in at lower prices. That's what we've done. We've been able to capitalize on the breakout to the upside. In fact, after the non-farm payroll data on Friday, we took the opportunity to lock in more profit on silver, banking 350 points on this breakout, banking into strength. So again, going into next week, we've caught all of this move to the upside. The breakout on Friday, I suspect again that we may see traders getting a bit too late into this move, and normally they're not rewarded for doing so. Again, I wouldn't be surprised to see a little bit more upside on silver as we go into the beginning of next week, but again, watch out for volatility after the US Labor Day holidays on Monday, so as we go into the middle of the week, and then after Thursday's European Central Bank announcement as well. I would expect certainly some choppy price action later on in the week. We still have a core position on silver, so we would benefit if we get further upside on this market, but really all the big opportunities lately have been buying sub 23 US dollars per ounce. Each time we've dipped back down towards that zone, it's offered a great opportunity to get in nice and low on this market. Then moving over to the other metals here, so copper, we continue to benefit from this market. We've got in after the recent sell-off that we saw in the middle of August. We talked you through this trade opportunity a number of times on the week ahead commodity report, that essentially you want to be buying into dips on this market, take advantage of the selling pressure that we had over the month of August. It was also the same with crude oil. Both of those markets are very correlated. We saw crude oil break down significantly in the middle of August, only to then completely recover within just over a week, rallying over 10% to the upside. That also followed through on copper and also palladium as well, which ended up having its biggest one-day move since May of 2020, which we were able to capitalize. We banked over 4,700 points profit on palladium at the start of last week. Palladium is still a market I like a lot over the month of September. It's still relatively low here compared to some of the other metals that have already started their run up to the upside. Oil prices already retested 70 US dollars per barrel. Palladium, the risk reward at these levels is still very attractive. I would definitely have this on your radar as we go into next week. Again, I would expect a bit of volatility due to the Labor Day public holiday in the USA and during the European Central Bank announcement later on next week. But then after that, palladium and copper typically do really well throughout the month of September. So I would definitely have both of those markets on your radar, especially as palladium is back trading around the 2,400 zone at the moment. And then just bring you back over to copper here, so you can see we've had a complete reversal here over the last couple of weeks. So essentially what I'm looking at on copper as we progress throughout the month of September is a retest of the recent swing highs, and then ultimately taking us back for a retest all the way back towards the highs that were tested in the beginning of July here as well. So we're wanting to keep our overall core position on this market. We've been able to build a number of positions, 6 trades on this market that we continue to manage. This is where we were buying right around the 18th, 19th of August at much lower prices. So we just continue to manage this trade as we go into next week. And then moving over to platinum, also a strong mover on Friday, up 2.6% into the close, finally breaking back towards the neckline. We've been very choppy on platinum here over really the last month. We're finally starting to see some signs of a basing formation, which is on the verge of breaking out. Many of the ratios are favoring platinum in the short term to continue to advance higher, but again, just be wary that we'll likely get some volatility with the European Central Bank next week, and also due to the Labor Day holidays in the USA as well. But platinum is another market I would definitely keep on the radar, certainly over this whole quarter. In fact, typically later in the year, over October, November, platinum tends to outperform other metals. So I would certainly keep that on the radar. As you know, commodities, they don't move up in a straight line, they will zigzag, and this really presents us as traders with back-to-back trading opportunities. One of the biggest obstacles that holds many retail traders back from achieving their desired success, it's not having access to data, market intelligence to make confident decisions with accuracy in these highly lucrative markets. If you follow the wrong strategy, or worse still, you lack access to the right data at the right time, you end up wasting lots of time, money, and effort, and you have no results to show for all of your hard work. If you really want to thrive, not just survive in these highly macro-driven markets, then you need to adapt and utilize a professional, research-driven approach. Trading like every other misguided retail trader using outdated technical analysis and gimmicky technical indicators will not work. The greater your data and intelligence, the greater your edge in navigating these fast-moving markets with superior levels of precision, confidence, and profitability. We still have another 4 months to go of this year. Time is the most valuable commodity that you have, and make sure you don't waste it. If you want to maximize your money-making potential, thrive, not just survive in these fast-moving markets, then you need to adapt your strategy to the current market conditions. You need to trade like the hedge funds, money managers, banks, the institutions, utilizing a professional, research-driven approach. You want to make sure that you're aware, understanding, and learning the daily, the weekly, monthly, quarterly cycles for each commodity. Alongside that, utilizing data, statistics, market intelligence, the facts in the market, understand the macroeconomics, the fundamentals. Alongside that, be aware of key areas of liquidity, capital flows in the market. Alongside that, you also want to be aware of the intermarket correlations, the ratios in the market, sentiment, and of course line that up with how the hedge funds, money managers, banks, and institutions are positioned in the market. That will help you massively to get an edge. So with that, if you would like to join our community of successful traders, learn the research-driven approach to the market, and join our professional mentorship program, there is an opportunity for you to do so. As a member, you get access to our exclusive live trading room webinars. You get access to our real-time trade ideas, institutional research and market intelligence, access to our private Members Academy website, and also support and one-to-one mentoring. For more information, just go to www.jointhelivetradingroom.com. The link is also below this report in the description, so just click on the link, make an application, and we will of course get in touch with you ASAP. And do make sure you subscribe to our YouTube channel. That way you're always kept updated with all of the latest commodity reports.